Welcome to Supernova Stock Watch. Looking at the top 5 dividend stocks with style. Studies have shown that dividend stocks with the highest future returns are the ones that should outperform other income-producing stocks. Those with a strong value score should do well, as research shows a correlation between dividends and value. And a good momentum style score can be helpful, as nobody wants to buy a stock just before it goes down. We will look at the top 5 that fall into this category. Number 5, Vale, ticker VALE. Vale is a mining company engaged in mining iron ore and pellets, nickel, manganese and ferroalloys, gold, nickel, copper, and other minerals and metals. The annual dividend yield is 7.21%. It operates logistics systems in Brazil, including railroads, maritime terminals, and ports. Vale is based in Rio de Janeiro, Brazil. Vale's total iron ore output was 315.6 million tons in 2021, up 5.1% from prior year levels. The company had earlier stated that it anticipated 2021 production to fall within the lower half of its range of 315 million tons to 335 million tons. Zacks Research Analyst scores this stock as a number 1 ranked strong buy, with an overall VGM score of A. TIP ranks analyst consensus is a hold with a 12-month forecast of a high of $23 and a low of $14. Number 4, BHP Group Limited, ticker BHP. BHP Group Limited is a resources company. It produces commodities that include iron ore, coal, copper, and uranium. The dividend yield is currently 7.91%. The company's segments include petroleum, copper, iron ore, and coal. BHP Group Limited is based in Melbourne, Australia. BHP Group's underlying attributable profit from continuing operations surged 57% year-over-year to $9.7 billion in the first half of 2022. On higher prices and strong operational performance, iron ore prices have crossed the $150 per ton mark, as investors expect robust restocking demand in China. Once COVID-19 restrictions ease, iron ore prices have gained on the Russia-Ukraine conflict, which will boost demand for Chinese steel overseas. BHP Group has agreed to pursue a merger of its petroleum business with Woodside to create a global top 10 independent energy company with large-scale production, development, and an exploration assets portfolio. The combined business will have a high-margin oil portfolio and long life of LNG assets. Woodside shareholders will own 52% of the merged group, while BHP Group's shareholders will own 48%. Woodside and BHP Group have estimated annual synergies of over $400 million per year. It is expected to be concluded in the June 2022 quarter, subject to customary closing conditions. Zacks Research Analyst scores this stock as a number 1 ranked strong buy, with an overall VGM score of A. TIP ranks analyst consensus is a hold with a 12-month forecast of a high of $82 and a low of $32.56. Number 3, Rio Tinto, ticker RIO. Rio Tinto is an international mining company. The company has interests in mining aluminum, borax, coal, copper, gold, iron ore, uranium, zinc, titanium, diamonds, and other minerals and metals. Their dividend yield is currently 10.38%. They have various mining operations in New Zealand, Australia, South Africa, Europe, and Canada. Rio Tinto had a record year that resulted from $38 billion in earnings before interest, taxes, and depreciation. They paid $16.8 billion in dividends to shareholders last year. They also had record financial results. Sales revenue was up over 42%, resulting in over 116% increase in net earnings. They invested $7.4 billion and distributed $15.4 billion of cash to shareholders in 2021. Zacks Research Analyst scores this stock as a number 1 ranked strong buy, with an overall VGM score of A. TIP ranks analyst consensus is a hold with a possible 19% upside, with a 12-month forecast of a high of $99 and a low of $92. Number 2, Genco Shipping and Trading Limited, ticker GNK. Genco Shipping and Trading Limited is a leading provider of international seaborne dry bulk transportation services. They transport iron ore, coal, grain, steel products, and other dry bulk cargoes worldwide. Their dividend yield is currently 12.13%. They employ a diversified asset base consisting of large Cape-size vessels and medium-size ultra, Supramax vessels, enabling them to carry a wide range of cargoes worldwide. Genco has declared 10 consecutive quarterly dividends since 2019. Zacks Research Analyst scores this stock as a number 2 ranked buy, with an overall VGM score of A. TIP ranks analyst consensus is a strong buy with a possible 43% upside, with a 12-month forecast of a high of $37 and a low of $26. Number 1, ZIM Integrated Shipping Services, ticker ZIM. ZIM is a pioneer in container shipping and has established itself as a leading global, asset-light container liner shipping company. Their dividend yield is currently 33.75%. They provide customers with innovative seaborne transportation and logistics services, covering the world's major trade routes. They have focused on select markets with competitive advantages and can maximize their market position. ZIM operates on a global scale, established operations in over 100+ countries. They continued to have consistent earnings growth and continued deleveraging. 2022 full-year guidance has adjusted earnings before interest and taxes between $5.6 and $6 billion. Zacks Research Analyst scores this stock as a number 2 rank buy, with an overall VGM score of A. TIP ranks analyst consensus as a hold with a possible 48% upside, with a 12-month forecast of a high of $120 and a low of $53. These are the top 5 dividend stocks with style. These shipping and mining companies might be great alternatives if you're looking for something other than REITs for high-yield dividends. I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. Thank you for watching. Please check out my other videos and the description for great deals and sign-up bonuses.